Hey y'all, Austin Broughton here with Guild Mortgage. I want to put together a weekly update for you going into, May. So happy Star Wars Day to my Rebel Alliance out there. We're going to get into some data and talk about where the market's headed and what's going on. So, Sacramento market update. Home prices are maintaining. They're actually staying near their peak levels in our market. Everybody's expecting some major decline over the last couple of years, and we just haven't seen it. But we are seeing some inventory shifts this year that are a little different. Part of that is due to interest rates. So interest rates right now are hanging in the mid sixes. That means some people are going to be seeing a 7. Some people still might see a 5, but mid sixes where we're at for interest rates right now. Stable, but elevated, not where we want to be. Okay. Our array of rates, according to Mortgage News Daily, based on today's data, 6.44 on a 30-year fixed, and you can read, so I'm not going to read all of these to you. But again, ticking up into that 6% range solidly on most products now. Okay. Where does that put us by comparison? So right now at a 644, we're kind of right in line with where we've been for the last month. We peaked out in the beginning of April, right around 6.5. So not crazy levels, but not where anybody's super excited about it. So I feel like it's slowed down buyers a little bit. It's slowed down some of the excitement that people were feeling earlier on in the year. What I'm a big fan of, though, is big picture context. So even being in the mid sixes, like a 6.44 today, we're still worlds better than we were, this time last year, right? So even coming into June of 2025, we had interest rates that were kissing 7% and above for like a good month straight, even a year ago. Now, we quickly came off those levels, thankfully, but what I'm hoping for is that this is one of those blips like we had then, where once we get some resolution going on with Iran and the Middle East, we're going to see these interest rates coming back down again, so we can get to these nicer levels we had in January and then towards the end of February. Okay. Macro factors like we talked about, the geopolitical tension, so what's going on in the Middle East with Iran. There's been some news about more of an economic freeze out happening with Iran right now, where it's literally costing them $4 billion a day that they can't export oil. And eventually they're going to run out of juice. So it's kind of a game of chicken right now, economy versus economy, and less of a troop altercation, more of a financial altercation. However, that does lead to bond market pressure because, hey, we're not sure how it's going to look in the future. So anytime we're talking about long-term investments like bonds or mortgage-backed securities, mortgage interest rates, there's going to be that upward pressure the more uncertainty there is. And looking into the future, we have a new confirmed Fed chair. Jerome Powell has decided to stay on as one of the directors. And we have the jobs data coming out this week. The jobs data is a little wonky, though, because it's going to be a lagging indicator. So we'll see how the Fed treats that data given the more current active situation and what's unfolding. Sorry. I did want to talk about demand, though. So we are seeing demand improving. We are seeing purchase applications on the rise. And I think on average, buyers are more accustomed to where interest rates are. Again, they're not excited about it, but everybody kind of remembers, hey, 7%, 8%, 2-3 years ago. We're still in a good place, but there's less of a run and get it kind of mentality about mortgages and interest rates today. What I did want to talk about was Sacramento County specifically. So Sacramento County is it's a melting pot because they've got everything going on in Sacramento County, but it's still a busy market. Okay. We're seeing 28 days as the median days on market for new listings. That's 28 days at the median from when that home gets listed until it goes into contract. And up to 68 days for the average days on market. So even when we factor in those slower homes, because there's going to be some homes that sell that first weekend with multiple offers. And simultaneously, there's going to be some homes that sit there for 2, 3, 4, 6 months before finally selling. So even averaging everything out, we're still at 68 days on market, which is a fast moving market compared to our national numbers. And we're up to 1953 for active inventory in the single family residence arena. So this isn't counting condos or mobile homes. This is single family residences active on the market or pending on the market in Sacramento County with a median list price of $599. So just south of $600K. Part of the reason why Sacramento is such a fast moving market compared to Placer, for example, is because it's a little more affordable, right? The median list price for Placer County is closer to 750, 760,000. So a little more affordability lends to a little bit of a faster market turnover there. Big picture, it is still a seller's market with how quickly things are moving. There are some buyer opportunities emerging. So what that means is we're seeing, roughly 1 in 3 homes are still seeing a price reduction or a credit or a concession being applied prior to closing, meaning there's opportunity for buyers to kind of offset the higher interest rates or haggle a little bit more on the right home. That's not every home, but on the right home. But what we're seeing is like the strategy that we can employ using temporary buy downs, using long-term rate buy downs with credits, allows us for better buyer opportunities than just trying to time the market. Because as we've seen, we don't really know where the market's going. We're all hoping and praying, but with the current administration, you never know what you're going to get on a Monday. Action items: talk to our buyers about focusing on the payment, not the interest rate. Interest rates are temporary, like we've seen. Interest rates could be back below 6% in 2-3 months, but that doesn't mean they want to hold off their entire life for a potential future interest rate. If there's a payment that works for them today on a home that fits their needs, we should go for it because we can always ratchet that payment down as we go. And sellers, pricing strategically. Okay, it's not a free lunch out there. We're still seeing some homes sitting and waiting, but homes that are staged correctly and priced competitively are moving, and that's what we want. That's what we want to see happen. So if you have specific questions or need a custom scenario run, I'm happy to chat. Feel free to reach out. Either drop a comment below on this video or reach out to me directly.